Hello everybody, it's Taurus Investing. It is Friday. On Fridays, we take a look at the portfolio. I hope everyone has been doing amazing. This is video number 60 nice, and we're sitting at 219 subscribers. So if you are new, please join me on this investment journey. And let's keep on keeping on, keep growing this thing. It's super free and easy to do. To hit that subscribe button and like and comment. That helps the YouTube algorithm get super duper happy, and yeah, more people get to see it. I greatly appreciate everybody's support and everything, and 219 is pretty awesome. And let's keep on keeping on. Anyways, go ahead and take a look at the portfolio. I got a bit of cash here because I moved out of my Activision position. I actually committed through with it. I was already up 14% or so, and I didn't want to risk something happening and the deal not going through and then it just falling all apart altogether. So, the way that things are looking right now, let's go back here. Consumers, 28%. Financials is 28%. Technology, I have at 20%. REITs is 13%, and industrials is 11%. So we will look at the consumer tab. Consumer tab got 50% in Lowe's, got 30% in Costco, got 20% in Pepsi. If Costco goes down anymore, which I wouldn't mind if it would, I will deploy some of that money into that. For the financials, we got SPGI Global, we got MasterCard and Visa, pretty even split there. In the technology, I've got Microsoft, and then I've got a short for the S&P 500 because I do believe that the S&P 500 is going to go down over the next 2 months or so. And if I can get a quick little gain on this, why not? So, boop. And for REITs, old Vici, we got Vici going. I'm just going to keep building that. I wouldn't mind if it would drop some so I could just add more to the position. And then Union Pacific, my only railroad that I need. So let's go ahead and take a look at the portfolio here. For year to date, we're up 7.16%. The S&P 500 is up 7.34%, so we are just barely behind. Again, it's a sprint. No, it's a marathon, not a sprint. It is a marathon. We are concentrating on long term here. Anyways, we're going to take a quick look at Qualtrim at all my holdings. Just kind of give you a quick little review of them. We got Lowe's free cash flow 5.65%. It's got good old dividend yield above 2%. Pretty low payout ratio below 40%. Very nice all around. A great holding. Pretty much everything you want to see in a company. They've got great dividend growth. Return on capital employed is absolutely ridiculous. They're doing share buybacks like crazy. The only thing I can knock it is the debt is a little high, but hopefully this is something I can start chopping at. But besides that, it's Lowe's. It's super reliable. They've been growing their dividend for a long time, and a thing with all of these companies is every one of these are growing their dividend by 10% or more every year. That's my primary focus, is compounding. I want to buy things that pay me more and more and more over time. So Costco, again, probably one of the best stocks out there, honestly. Thing I love about it, it's more cash and debt on hand. Again, revenue, EBITDA, net income, EPS, everything's just flowing in the right direction beautifully. The only thing I would knock it is the shares outstanding is slowly going up, but that is a-okay because everything else is just pretty much virtually perfect when it comes to this company. Absolutely amazing holding. I love it under 500. Everything in today's video is for entertainment purposes only. It's got to put that out there. I'm not a financial advisor. PepsiCo, they recently increased their dividend by 10%, so they joined that 10% squad. Again, EPS is ticking in the right direction. Revenue, everything is just ticking the way that I like to see it tick. If you got any questions about any of these holdings, or if you'd like for me to dive deeper into any of these, let me know, and I would not mind whatsoever to do that for you. S&P Global is another one I love. Again, just revenue, net income, EPS, literally everything just ticking in the right direction. And when it does come to my holdings, one of my rule of thumbs with debt is the debt cannot exceed 3%, 3 times what the EBITDA is. I like to keep it around that because it's still manageable at that point. And then we got MasterCard. MasterCard's another one. It's just everything's going in the right direction. They've got debt, but it is extremely manageable. Extremely manageable. Another fantastic company. Right there with it, just Visa, pretty much the same boat. Everything's ticking the right way. My main focus with this portfolio is I want to beat the S&P 500. I want to beat the snot out of it year in and year out. Microsoft, my big boy holding. I love this company. I bought in at $254. It's currently $291, so I am not buying any more of this. But if it dropped, I absolutely would just load the boat even further with it. I love this company as a whole, and what they're doing with the whole chat GPT, I think that's what it's called, that with the Bing search engine, is just, there's so many things ticking for Microsoft that, like, besides this amazing looking balance sheet that has more cash than debt on hand, they're buying Activision more than likely. There's just so much to like about it. And I personally like Microsoft a lot more than Apple because Microsoft grows their dividend over 10% every year. Apple generally does not do that. And they've got a dividend yield over 1% when I got in. And Apple's is pretty low. I think Apple's is like 0.6% or something like that. Either or. Next up, good old Vichi's. Quick look here at the financials on that. When it comes to these, REITs have higher debt. And, of course, that payout ratio looks weird. When you look at REITs, you want to look at funds from operations. You don't want to look at the payout ratio necessarily. And, like, EPS is kind of irrelevant when it comes to these. But this is probably the best REIT in my eyes. I absolutely love it. I got in the 31 area. Great entry point. And then Union Pacific Railroad, another one. This is probably in my eyes, this is the best railroad company out there. They generally carry higher debt. But again, this falls in that 3-time category. The debt does not exceed 3 times the EBITDA. Yeah, I like it. It's a great holding. So a position that I absolutely am going to buy into, and I've slowly been watching it tick down further and further over the last couple of days, is MSCI. This company is an absolute behemoth. We're going to take a quick closer look at it. Dividend yield of 0.99%, payout ratio 42%. Great. I wish I could have got in around here. Oh god, if I can get this below 500, I will buy into it so hard. Revenue, EBITDA, free cash flow, net income, EPS, everything just ridiculous. Shares, they're buying back their shares. They got a return on capital employed above 20%. Heck, 32%. They've got some debt, but it is easily manageable. And the really big thing with this company is that they've been growing their dividend for 9 years. That's cool and all, you know. The dividend growth, look at this. Over the past 1 year, 25.8%. 3-year, 22% average, and a 5-year, 28.25% average dividend growth every year. Are you kidding me? And then we're going to go over here to Portfolio Slab and compare it up against the S&P 500. Over the past 5 years, MSCI has been up 285.47%. The S&P 500 has been up 70.65%. 10-year. Just what? The 10-year S&P 500 is up 216%. MSCI is up 1,709%. So the proof is in the numbers. It is a high-quality holding. Therefore, it is worthy of a high-quality price. I've been watching it because it has slowly just been trickling its way down. It was around 560, and I've just been watching it slowly drop. So I do have some cash still on hand that I'm holding, and if this thing ticks below 500, bet you booty I'm going to be throwing some monies into it, and I might even DCA into it if it drops below 500 and stays there. But yeah, that's just a quick look at the portfolio and everything I got in it, and what I'm hopefully going to be able to buy soon. I will have this in my portfolio if it's the last thing I do. It is a prime rib $300 steak of a company. It is absolutely worth it in my eyes. But yeah, guys, hope you enjoy that, and hope everyone has a fantastic weekend. Until next time, see ya.